Hello my fellow investors and welcome back to another stock analysis video. Today guys, let's take another look at a company that was recommended by Tony Myers, where he pretty much just said, can you do the company LPX? Now I have no idea what this company was, and after doing a little bit of research, it's actually fairly interesting. You guys are seeing the website right here. They're essentially, guys, well, a home building company. They produce products for home building. So that's fairly interesting, especially when the past 2 years, housing prices have just been skyrocketing, as well as things like the price of lumber. So let's actually take a look at the company's fundamentals, as well as a quick look into their earnings summary, because they just had earning on the 1st of November. So that'll be fairly interesting as well. And then let's do discounted free cash flow to see if at the current share price, this is a buy. So with that said, let's get started with this analysis. Alright guys, let's come into the earnings, because again, as I just said, they did have earnings on the 1st. So we got here the EPS normalized actual came in at $1.72 for a beat of 21 cents. EPS gap actual came in at $3.05, which was a beat by it was essentially like a massive beat, $1.55. Revenue came in at $852 million, which was a beat by $21.27 million. So that's fairly interesting. And the fact of the matter is that, well, they did amazing when it comes to these earnings. Now, the next upcoming earnings, this is interesting because, well, they're essentially predicting this company to miss a lot, right? Like, you got 9 revisions here that are essentially bearish. So that's going to be fairly interesting. And I'm actually going to mark this date down for February 15th for these guys' earnings because, well, their fundamentals are very interesting. So now let's jump into the calculator. We got the ticker symbol of LPX, market cap of $4.43 billion, a PE of 3.9, and a current share price of $61.80. Taking a look at this on the 1 year, guys, they're only down 8.63%. On the year to date, they're down 20.76%. So you can clearly see that on the 1 year, they're not that low. Like, there are a lot of companies out there that are even lower than this. On the year to date, they have fallen almost at 21%, so that is a lot more than the 1 year. However, guys, take a look at this 52-week range. $48.20 at the lowest, to $79.77 at the peak, and we're essentially in between these two, so we're not at 52-week lows or at all-time highs. They do pay out a dividend of 88 cents per share, which is a yield of 1.43%, a payout ratio of 6.35%, no 5-year CAGR, and 4 consecutive years of dividend payment. And the reason why this 5-year CAGR isn't there is not for any bad reasons, it's just that they just haven't had 5 years of dividend payment to begin with. They started issuing this dividend on February 22nd, 2018, so obviously they don't have 5 years of data yet. But as you can clearly see, aside from that, it's not looking too bad currently. Ex-dividend date passed as of November 8th. Payout date is on the 1st of December, and they pay their dividends quarterly. And with this 88 cents in annual dividends per share, we can see that based off of their shares outstanding, they only pay out, guys, $63.1 million in dividends every single year. And based off of their 5-year average free cash flow, they're still left with $422.9 million. And based off of their last year's free cash flow, they're still left with almost $1.2 billion. And these payout ratios are, well, what else can I say? Amazing. 5.13% for the last year's free cash flow, and essentially 13% for the 5-year average. All this is telling me is that they can 100% continue to pay out this dividend and even increase it in the future. So now let's actually come into their fundamentals, guys. We got the net income 5 years ago of $390 million to 1 year ago of $1.4 billion. That is an increase, guys, of 253%. So that's interesting. Now, looking at this graph, we can see, well, one anomaly here. Well, there's technically 2 anomalies. The first anomaly would be 3 years ago, guys, they went negative to $-5 million. However, you can clearly see that it was essentially like a fluke year. Now, what's funny about this is that this is on 2019 numbers, not 2020. 2020 numbers was 2 years ago, and they actually went positive by a significant amount. Now, the second anomaly here would be this massive jump from $500 million 2 years ago to $1.4 billion 1 year ago. That's a really big jump in my personal opinion, and that's mainly due to the fact that just prices of housing has just skyrocketed, and as well as pricing for home building materials like lumber has also skyrocketed. So I do not foresee this number to continue to go up in the future. I do foresee it to come down a little bit, but I don't think it'll come down to this level. It'll probably be somewhere in between these, but in the future I don't think we're going to see these massive numbers. Overall, guys, I'm actually gonna have to give this like a 40%. Now hear me out. The reason why I'm actually giving it this low is not because this is actually looking bad. I'm willing to accept this 3-year value as a fluke. Obviously, do your own research as to why this occurred. And even though this is a really good thing to see over here, it's just too big of a jump for me. Does that mean that it's bad? Do I foresee this thing to just completely collapse in the next couple years? Probably not, but as it currently stands, I can't give it higher than a 40 because of the uncertainty when it comes to the housing market. Coming now into the free cash flow, we see something similar. 5 years ago of $325 million, 1 year ago of $1.23 billion, increase of 278% with an average of $486 million. Once again, 3 years ago, they went in the negatives to now negative $4 million, and we see a massive jump from 2 to 1 year ago. However, we do see a little bit of a decrease, guys, from 5 to 4 years ago in the free cash flow, whereas in the net income, it actually went up slightly. So unfortunately, I'm gonna have to give this one a little bit of a less of a grade at 35%, mainly because of the fact that, you know, it's similar to the net income, but they did went down here, so that's gonna give it a little bit of a dent. Coming now into the revenue, we got 5 years ago of $2.7 billion to 1 year ago of $4.55 billion, increase of 66.53%. We do see once again the dip 3 years ago, still in the positive though, so that's really good. A slight increase from 3 to 2 years ago, not exceeding 4 years ago's value though, and then up the massive jump from 2 to 1 year ago. So I'm going to give this, guys, a little bit higher than that of the net income, so I'm going to go with like 45%. So 45, 35, and 40% for the profit metrics, kind of in between in my personal opinion. Coming down to the total assets minus total liabilities, currently they're at $1.4 billion in this difference. They're at least still in the positive. We do see a massive collapse when it comes to this difference, going from 4 years ago to 3 years ago, going from 1.7 to $1 billion. I guess massive isn't really the correct word, but they did fall a significant amount. However, ever since 3 years ago, guys, they are coming back up significantly. However, they did go down from 2 to 1 year ago. Definitely something happened here, guys, 3 years ago, which we are seeing consecutive declines this exact year. So definitely something to do your own research on as to why this occurred. Average total assets is around 2.2 billion. Average liabilities is 893 million. Doing this difference, we get around $1.31 billion. I'm gonna give this, guys, well, I'm not really certain what to give this, so I'm gonna give this like a 55%, somewhere in the middle. They're still in the positive, and they have been trying to bring this back up, which they have, but we do still see a little bit of dips here, right from 2 to 1 year ago, and this massive decrease from 4 to 3 years ago. Coming down to the cash flow minus the liabilities, this one is just incredible. Currently, as of 1 year ago, guys, they're in the positive $211 million in this difference. 3 years ago was their lowest point. Once again, we see that anomaly that happened 3 years ago at negative $846 million. However, 2 years ago, they brought this back up massively. And then from 2 to 1 year ago, they actually went positive. This is not something that you see when it comes to this. Now, from 5 to 3 years ago, they were decreasing it, but then again, they brought it back up. So this is, it's good, the fact that they are in the positive as of 1 year ago, but is this sustainable? It all depends as to what happens when it comes to the prices for these building materials. So that's definitely something to keep an eye on. Average cash flow minus the average liabilities, it is negative $406.8 million. Guys, I'm actually going to give this like a 70%, mainly because of the fact that, well, they are in the positive today, and as of 2 years ago, they went up significantly closer and closer to zero. Coming out into the shares outstanding, this was just insane. I was looking at this and I'm just like, dear Lord, guys, take a look at this. 5 years ago, they had 145 million shares outstanding, and as of today, 71.7 million shares. What? That's insane. That is a decrease of 50.52% on the 5-year and 16.24% on the previous year to the current year. That is insane. The worst year that they had when it comes to this was 3 years ago to 2 years ago, where they only bought back like a little amount of shares. Aside from that, guys, this is insane. So the fact is that they have such little amount of shares. When you guys see that target share price, you're gonna be like, what? Why is that? Why? That's clearly incorrect. Well, that's the reason why. It's because their shares outstanding is just so tiny that it's just mind-boggling. Overall, guys, they're buying back shares. They haven't issued shares. I don't know how they'll do this in the next 4 years. If they continue this, there won't be any shares left to buy. So, I'm gonna have to give this like a 100% based off of what I am considering here, right? I mean, I don't see any issuing, not even a single year, and they have been buying back massively, so 100%. And lastly, when it comes to the cash equivalents, they currently hold $469 million with an average of $558.17 million. Coming out to the weighted grades, guys, we gave the net income of 40%, free cash flow 35%, revenue 45%, assets minus liabilities 55%, cash flow minus liability 70%, and the shares outstanding of 100%, for an overall grade of 53. The main issue is these profit metrics, honestly, because sure, assets minus liabilities could be better, but honestly, it's the free cash flow, it's the net income, it's the revenue. They have a massive outlier 3 years ago, as well as a massive increase from 2 to 1 year ago. So that's essentially why I'm putting it this low. However, I'm very hesitant to actually believe this 53% because all their other stuff looks really solid. Alright guys, now let's actually find out what kind of price we should be putting in for this company. So, okay, before we make any assumptions here, let me just point out something that I'm pretty sure a lot of you guys haven't been able to catch on yet. With no assumptions made, the target share price, not adjusting for debt, $202.80. What? That is crazy. And then adjusting for debt, it is $412.14. So full stop to all the haters, who are saying that could never, what? That is so much. Okay, understand what discounted free cash flow is. And I always have to say this because I just don't think people fully understand. For starters, I'm not telling you guys what the price of the share price is going to. I'm telling you the value of the company. Separate the stock and the company. There's two very different things. So the reason why this is actually this way is because of what I just said when I was talking about the shares outstanding. 71 million shares outstanding, guys. That is really small. Like, that's really tiny. Apple has it in the billions of shares outstanding. This company doesn't. This company barely has, well, 100 million shares outstanding now because they have bought it back recently. So sub 100 million shares. So that's the reason why this is actually going this much. And on top of that, you add a massive free cash flow, a massive revenue in the billions of dollars, a massive net income as well, which as of 1 year ago, they are in the billions of dollars. You're going to get this massive number. So that's the reason why, even with a required rate of return of 10%, this is the reason why. So putting in, guys, a revenue growth assumption and a predicted share buyback of anything, right? This is going to go up even more, assuming that the numbers are positive. So let's actually do this. Coming over here to Seeking Alpha, guys, we can see that the forward is estimated at 3.5%. So let's actually go really conservative, and let's say 1% for the low assumption, 2% for the median, and 3% for the high assumption. Now for the predicted share buyback, believe it or not, I don't know, because with the past 5 years, they bought back 50%, and in 1 year, they bought back 16. Will they continue to do this? I'm not certain. This is something definitely to take a look at their earnings report. I probably should have done that, honestly, but I really just wanted to take a look at their fundamentals first, because if the fundamentals make sense, you could pretty much assume what their earnings report are going to say. These fundamentals are like all over the place, and I'm actually really curious to see as to where their free cash flow is actually going, obviously to buy back shares. However, I would actually like to see in their earnings report what they plan to do with these predicted share buybacks. As it currently stands, I'm going to say, guys, that they will not be doing 50% of shares buyback in the next 4 years. I'm going to say with like 3, 4, and 5% projected share buyback. So with that, we get target share prices $216.61 to $237.24, and then adjusting for debt, $440 to $481.36. Adding a margin of safety of 5, 10, and 15%. This is between $373.97 to $457.30. So for all of those of you guys who may be skeptical when it comes to these numbers, I'm with you. I am 100% with you on this. I do not understand these numbers at all. This is very, very weird, right? It's just very, very weird as it stands. But this is mainly, again, due to the fact that they just have little shares outstanding. They barely have any. That's the reason why. So let's actually take a look at, guys, a second opinion, because these numbers just have me really putting up a red flag. So let's take a look at the book value per share. As of today, this is saying that this should be worth at around $19. So that's interesting. And looking at the tangible book value per share, once again, this should be worth at around like $19, to be exact, $18.47. So I don't know. I really do not know. This kind of free cash flow is telling me, something insane. But then again, it does make sense because of the fact that just the shares outstanding are really low. So guys, please always take this with a grain of salt. This is not financial advice. Every investment is the present value of all future cash flow. Have these calculated for free, guys, because I want you guys to be making your own assumptions when it comes to all of this. Please do your own due diligence. Read the earnings report, read the 10Ks, read the 8Ks, and so on. Do not just follow what I am saying. And this is exactly why I'm giving out these calculators for free. I'm also giving out, guys, obviously, as you guys just saw over here, my book value calculator, the reevaluation calculator, and a dividend tracking sheet. If you guys haven't checked out that video where I go over how to actually set this up, make sure to check it out. It's really cool. I'm giving it out for free, guys. And this thing that I made is a multi-step thing. However, I personally like it. It's something that you could use on like a day-to-day basis if you guys are interested in certain companies, whether or not they pay out a dividend. So please have these all for free. All I'm asking for in return is just help me grow my channel, like, subscribe, comment. It really does help with the algorithm on YouTube. Thank you so much for everybody who have subscribed so far. I cannot believe it. I really cannot believe it. I just can't believe it. Again, thank you all so much. I would have never been here without any one of you guys, and it just motivates me to make more videos like this. So thank you all so much. I really do appreciate it. And have these calculators for free, guys. I'm never going to take any sponsorships. Again, if I ever end up taking a sponsorship, it'll be like food related stuff. But aside from that, I'm not interested in any other like scammy company or scummy company. I'm just not a fan of it. So thank you all so much. You guys are the reason why this channel has grown so much, and I'm giving you guys as much content as I feasibly can. So now let's actually take a look at this company when it comes to this dividend. 88 cents per annual dividends per share, guys, is not a lot. So putting in $5,725, this only nets you $81.52 in annual dividends, quarterly dividends of $20.38, and a monthly dividend of $6.79. However, guys, if you believe that this company will continue to raise their dividends, which they might be doing so in the future, and if you believe that this company's share price should be worth $400, I mean, this is looking like a steal right now, am I right? But again, not necessarily certain about those numbers. Please do your own due diligence. All in all, LPX, Tony, let me tell you something. I was very skeptical when you just gave me all of these companies out of nowhere. So far you have given me, what, 3 or so that I've been kind of meh about. This one is something that I may actually put on my calendar to see for their next earnings report, because I'm fairly interested in this one. Not gonna lie, I am very interested in this one. Am I going to buy it? Not right now. I would like to take a look at their earnings report and see how they actually do in Q4. But guys, this company is looking interesting, if I do say so myself. That pretty much is for this video. Like, if you like, comment, subscribe. It really does help with the algorithm on YouTube. You guys can follow me on my new tech sites. I'll link in the description below. So with that said, peace out, and I will see you all in the next stock analysis video.